Hello and welcome to Money Gist, bringing you all you need to know from the topmost monetary authority as well as the top stories on the economy this week. I'm Uliye Misidada. What if your phone could be your biggest tool for financial freedom? That's the message from the Central Bank of Nigeria at the CBN Fair in Gombe during the week, where the Apex Bank said digital payments are helping to bring millions more Nigerians into the formal economy. According to the CBN Governor, Olayemi Kadoso, represented by the Acting Director of Corporate Communications and Investor Relations, Hakama Sidiali, financial inclusion means giving everyone, whether you're a trader, student, artisan, or small business owner, easy access to payments, savings, and other financial services. The bank says wider adoption of digital payment channels will help grow businesses, create more economic opportunities, and support Nigeria's long-term development. To make that happen, the CBN is rolling out initiatives like the Nigeria Payment System Vision 2028, the non-resident BVN, and the B-Match Foreign Exchange Platform. The Apex Bank also says its reforms are beginning to pay off, citing easing inflation, stronger external reserves, and a more stable foreign exchange market. It urged Nigerians to use only verified CBN information channels and help protect the integrity of the Naira. At the CBN Fair in Boji on Thursday, the central bank says it wants to hear directly from Nigerians on how to improve digital payments and financial inclusion. The bank's spokeswoman, Hakama Sidiali, represented by Deputy Director Michael Daliop, asked residents to share ideas and feedback that could help shape future policies on banking, digital payments, and economic growth. The event brought together banks, regulators, businesses, students, and other stakeholders to discuss how more Nigerians can access safe and convenient financial services. The CBN says the nationwide outreach is all about bringing more people into the formal financial system and making banking easier for everyone. It also reminded Nigerians to rely only on its verified communication channels and warned against spraying, mutilating, or abusing the Naira. Nigeria's economy showed more signs of recovery in July as the central bank's Purchasing Managers Index (PMI) rose to 51.1, up from 50.1 in June. That's the second straight month of business expansion. The biggest boost came from the services sector, which returned to growth after 3 months of decline, while agriculture stayed strong for the 24th consecutive month. But it's not all good news. The industrial sector remained in contraction for the 4th straight month, and crop production also slipped, raising fresh concerns about food inflation. Overall, business activity is improving, employment is rising, and inflation pressures appear to be easing. The big question now is whether industry can finally recover and keep Nigeria's economic momentum going. The federal government is moving to stop fuel price manipulation in Nigeria. The Nigerian Midstream and Downstream Petroleum Regulatory Authority (NMDPRA) has proposed new competition rules that will ban petroleum companies from fixing pump prices, creating artificial fuel shortages, sharing markets, or coordinating business decisions that reduce competition. If approved, marketers, refiners, and importers will have to set prices independently. Companies could also face fines of up to 5% of their annual petroleum turnover, daily penalties running into 50 million naira, and even license suspension for serious violations. The regulator says the rules are still proposals, not yet law. Stakeholders have 21 days to submit comments before a consultation scheduled for September 22. Manufacturers in Nigeria are asking the central bank to cut interest rates below 20%. They believe the current monetary policy rate of 26.5% has made bank loans too expensive, making it harder for factories to expand, create jobs, and increase production. The Manufacturers Association of Nigeria also wants manufacturers to get priority access to foreign exchange and is urging the government to fully enforce the Nigeria First policy by ensuring that government agencies buy at least 80% of their goods from local producers. The good news is manufacturers are becoming more optimistic. Their confidence index rose from 48.7 to 52.1 in the second quarter of the year, thanks to recent government reforms. But they insist that without cheaper loans, better forex access, and stronger support for made in Nigeria products, the sector cannot reach its full potential. So what do you think? Will cutting interest rates help Nigerian manufacturers grow? Or should the CBN keep rates high to control inflation? Should manufacturers get priority access to foreign exchange? What about enforcing the Nigeria First policy, mandating government agencies buy at least 80% of their goods from local producers? Share your thoughts below. And that's all the money gist for you at this time. Be sure to like, share, subscribe, and follow for more short, clear, and direct business and economic updates. I'm Oluye Misidada. See you in the next one.